The 7 sales tricks of lousy stock tippers. So thanks for being here. I don't mean in this case to berate any one in particular, but there's obviously a lot of people out there that aren't really playing fair when it comes to their marketing. That's not to say there aren't some genuine ones out there, but they are hard to find, and it's that getting that needle in the haystack. And I just want to help you by coming from the sort of the other side, as it were, and letting you know on a few of the things I know that go on in the industry and just aren't really correct. So if you know what to spot, then you'll be able to make better decisions. Where there's money to be made, obviously, and there's no question about it. I mean, let's not get negative here. I mean, there is money to be made in stocks. We all know this because we see certain stocks going up, some stocks going down, and so on. So there's no question about it. You're on the right path. But where there's money to be made, there's demand for information, naturally, on what to buy and so on. So that means there's a vast supply of what is often contradicting information. So there's confusion. People don't know which way to turn. Who shall I get? Which tipping service shall I use? The good news is that a lot of this information is what I call noise, and it's just cutting through the noise and all the static. I'm going to teach you to cut through all that nonsense, and it's really very simple if you can just see past these tricks I'm going to tell you about. So first of all, who am I? Who am I to be telling you this? I'm a trader for over 20 years now. I've been the inventor of several profitable and simple trading systems. One of them I patented. My signature trading system is now well proven for over 7 years. And I also have an investing system that's proven for over 38 years now. And you can always you hear from me about those, but I'm not here to talk about that right now. I'm also a twice best-selling author. I'm a former airline captain. That was how I started, and I think I learned a lot from that in terms of it's taught me how to be a disciplined trader, follow rules, follow checklists, etc. But that's another story for another time. And I'd like to think, I'm a new friend on this basis and mentor. So let's get into these sales tricks then. A good stock tipper doesn't need any of this stuff. They're just going to show you their entire track record, and you'll be able to see for yourself. But when that's not the case, then they need to employ the smoke and mirrors that I'm going to tell you about now. So here's the first one. It's called being a perma bear or a perma bull. So what does that mean? That means I'm always bearish or always bullish, right? Bears meaning the market's going to go up, and bears meaning the market's going to go down, and the bulls are saying the market's going to go up. So what's the point in that? Well, it means that at some point I'm going to be right, isn't it? It's if I keep saying the market's going up, the market's going up, then I can, and it does go up eventually, because at some point, of course, the market goes up and down over time. And by saying that, I can say, you see, I told you, I called it. I said the market was going to go up. And likewise, when it's going down, this is the most common one used actually, is that I said I called the top of this market and I predicted when it was going to go down. Yeah, that's great, but if you're making that prediction every single day, of course you're going to be right at some point, and needless to say, you're only going to hear about those predictions when, the day that it was right. And there was a book written, in the 90s called Dow 36,000. And at the time, the Dow wasn't even at 10,000. And so, of course, now we're approaching a time, 30 years later, where the Dow is getting over 30,000, and this guy at some point is going to say, wow, you see, this book predicted it correctly. I mean, that was an easy prediction. You look at a chart for 100 years, the stock market's always going up. So you see how these things can be done. This, like I said, this man called the last crash. These are typical sort of headlines that use the perma bear, perma bull trick. The stock is going up. Well, that's a fairly easy call to make, because at some point most stocks eventually go up. It might take 10 years, but as long as that stock doesn't go broke and go to nothing, you find a cheap one, and then sure enough, at some point you're going to say, yeah, well, what a great prediction that was. What you need to know is not just what to trade, and here's the big thing, and this is where the real skill comes in, this is where a proper trader comes in, is you need to know when. You have to know when it's going to happen. All this stuff I just talked about just now is meaningless. Your response to someone who comes up with stuff like that is you need to say when. Market's going down. When? Dow's going to 36,000. When? This stock is going up. When? That's the second part of the question that nobody asks and nobody answers, conveniently. Sales trick number 2. The next big thing. Don't you wish you would have bought Google before anyone knew what it was? Yeah, I mean, of course, we all would have liked that, wouldn't we? But you see, me saying that right there, it implies that I called the person saying it. It's almost as if, they had called Google before I knew anyone, by them saying it by implication. So you see how that saying it without saying it, that implication is there. Your response to that is you say, great, well, tell me, give me proof of a big name stock that you discovered. If you called Google, show me the email, show me the letter that went out that called that. It's easy to cut through the smoke and mirrors as long as you don't let your greed, suck you into it. Because it's about timing. It's about when, I mean, sure, you could buy a stock right now and it takes 50 years, 20 years to go up. And that money could have been used for something else. It's about your annual gain, right? Any given year, the average of the S&P 500 over time averages about 10% a year. So at any point in time, I can just park my money in the S&P 500 and make 10% a year. If whatever it is I'm trading or investing is not beating that, then what's the point? So you may well have a stock that's gone up, doubled in value, but if it took 2 years to do that, you would have been better off doing just in the market. So you see, everything is relative. Me personally, for what it's worth, I'm not interested in finding the next big thing. That's not almost like an ego thing, to be able to say, oh, I called Google when it was like nothing. I'm not interested. All I'm interested in is fast profits. The name of the stock is irrelevant to me, and that's the name of the game. Sales trick number 3. We saw Amazon at 95 cents. Well, we all saw that, didn't we? So you see, it's language again. Don't let your greed blind you from wordplay. Your response to that is, did you pick Amazon as a stock pick at 95 cents? If so, show me the proof and the date. By the way, my track record is in plain view and it just is what it is. Sales trick number 4. Here's what it is. I know that pick is down 50%, but you have to think long term. So this is the sort of thing they might say if you had already bought a stock tipping sheet and usually the performance is dreadful. And I'm not talking about small companies now either. I'm talking about large, well-known names. And it's very common to see a stock that's sitting there on their pick list and it's down 50%. And if you question that, or anyone questions that, this is the standard reply. I know it's down heavy, but you have to think it's for the long term. It's a lot. Stocks are a long-term investment. Well, in the long term, we're all dead. And it goes back to what I was saying before. It's about beating the market. It's all about beating the market. You need to be doing more than 10% a year. What's the point in any of it? Being down 50% is terrible. Your capital is precious and it needs to work. It needs to work at least 10% a year. I could just put it in the S&P 500. Listen, a 50% loss means you need that stock to have 100% gain just to get back to break even. That's completely unacceptable. I won't, any good trader, me included, I won't trade unless a loss is controlled to no more than 5%. I won't even get in the trade if I can't see that if this trade doesn't do what it's supposed to do. Great, okay, I'll abort this trade, and if I do, I've only lost more than 5%. That is an acceptable loss, and that's just part of the game. Sales trick number 5: cherry picking past picks to advertise good results. This is probably the most well used one. If I pick 10 stocks over the last few months, and I'm bound to have found, just by, it's like throwing darts at a list of stocks. I'm sure enough something I pick is going to go up. That's just playing the odds. How wrong can it go? You're only going to do a buy or sell. It's only like it's like a coin toss. If I do 10 stock picks, there's at least going to be one that's going to have gone up, and then I'm going to be able to say in my advertising, look at this stock pick I made, and it's up 50%, 100%. Awesome. But of course, that's cherry picking. You're not seeing all of the picks. What about the 9 losers, or whatever it is you did? What's the whole? You want to see the full track record and all losing trades, including percentages. You want to see the date it was picked, the date it was sold, and including all the losers. And then you want to look at the total. What's for all these picks? If you had made them all, what would you be looking like now? Now, of course, you're at the mercy here of people just not barefaced lying, but there's only so much we can do here. But generally, they don't last too long because people are making these picks, and if they were absolutely lying about things, they wouldn't be able to be around long. So, and this is an important point just for trading generally, and it's an important point. If we are talking about evaluating stock picks and everything, what is not a not fair thing to do with them is to have these crazy expectations of you must win every time. That's anybody, and it's not one of these sales tricks, but I'm telling you right now, anybody who tells you 100% of my stock picks have gone up, that is highly, highly unbelievable. I mean, you need to run away from that because that's impossible. You are going to lose some. Get your head around that. Run away from anyone who says you're not going to. But here's where the skill comes in. As I mentioned already, the trick is to minimize those losses that when they do happen. No more than 5% in my case. And then let the winners ride. This is really important. Nobody knows what will happen. Other than the really true insiders that you're never going to get access to and certainly will never be doing stock tips, nobody knows what will happen. All we can ever hope to do is just play the odds. And that's the game I play. And that's why I've got an 81% strike rate with an average loss actually of only 3%. If you go into any casino, you would play that game all night long. Sales trick number 6. Using an arbitrary 25% loss. This is very common. If you have signed up for a stock picking service and you'll say, here's a stock pick, and you should set, and they won't tell you even their price target. They'll just say, typically say just buy that. And if it goes down 25%, abandon ship. That is terrible. Run away if you see that, because 25, just like the 50% one, 25% is huge. It's a disaster if I have one like that. This also shows you that the stock picker behind it is flying blind. They have no appreciation for price action or technical analysis. Money is made in the timing. I said earlier, it's not enough to just say buy this. It's about when. Don't just tell me what to buy, tell me when to buy it exactly, and no more than 5%. Sales trick number 7. Pushing your FOMO button. What's your FOMO button? It's fear of missing out. And this is, again, being blinded by greed and letting wordplay, and it's that fear of, look, if you don't get out, if you don't get in this now, you're going to lose, you could be missing the next Google. But it's very important. You mustn't just look at the upside. You must look at the downside. Instead of looking at how much will I make if I'm right, you must look at how much will I lose if I'm wrong. That is the most important question, and it's something just nobody asks. Manage the downside and let the upside take care of itself. This is usually associated with cherry picking, because if they pick the best one, the best stock pick they've ever made, it went up 100%, and if the next pick's coming out any day now, and if you miss out on this one, you could be missing out on the next 100% pick. So cherry picking plays a good part with the FOMO button there. But this is actually genuine, by the way. If the stock tipper understands timing, which is the thing I've always talked about, it's all about when, then, I'm not saying this, it's a FOMO button, fear of missing out exactly, but if the person understands timing and there really is something on the radar right now, then that's absolutely legit in fact. But there are plenty of trades, every year. I mean, I'll admit, sometimes there are ones that are, wow, this is a really no-brainer. It's like, picture perfect. But, you never need to worry about the fear of missing out, usually.